What's up, guys? So apparently the collapse of UST and Luna was devastating, but there is still hope for crypto. First, I want to highlight that a lot regular hardworking people lost money because of the crypto market crash over the last week or so. Some people lost all of their money. While money isn't everything, losing a lot of it sure does feel like it. If you or someone you know lost money in the Luna UST crash, know that life is always worth living. So yeah, the Luna UST crash has caused a lot of devastating, depression, and it just ruined a lot of people's lives because a lot of people had hopes in this coin that it would just be more valuable over time, but it just crashed and depegged, and the whole crypto market has been going crazy lately. If you don't already know, Terra USD, a crypto that is supposed to stay at a dollar, is no longer a dollar. When something is supposed to be a dollar and it is not, that's usually not good. What's more, the crypto token that backs it, Luna, also lost virtually all of its value. These losses have been reported on, and so in all likelihood, this is the millionth piece about UST you've seen. So yeah, guys, Luna was at an all-time high of almost $120, but uh, the UST depegging caused it, just to crash all the way to less than a penny, and now it's a shit coin basically, which is it's fucked up. But it has to be done because readers will remember me gushing over the Luna LFG, the nonprofit aimed at promoting and stabilizing the Terra ecosystem, announcing it will buy 10 billion of Bitcoin to back UST. In fairness to me, I was mostly excited that I was able to write about something that Halfini published, but in fairness to the truth, I was not excited about the possibility of a Bitcoin-backed stablecoin. There are these things in crypto called stablecoins. Stablecoins are supposed to be a dollar. Usually, sometimes they are €1 or one won, but usually not. Blame US dollar hegemony. Stablecoin exists so that cryptos can get in and out of the dollar easily without needing a bank to approve deposits and withdrawals. Stablecoins facilitate most crypto volume trading and power the never-ending crypto that is DeFi. So yeah, guys, if you don't know, stable coins basically power the decentralized finance networks, and they also, they're reliable coins. People think they're reliable and they're the most trustworthy, but since the Luna UST crash happened, a lot of people are having second thoughts about it now. More importantly, stablecoins are used by citizens to totalitarian governments on hyperinflation. There are a few flavors of stablecoins. Tether is one, USD is one, Binance USD, and DAI. Also, Terra USD. They're the five largest stablecoins, and they represent $160 billion in value. Three of the stablecoins are collateralized stablecoins issued by centralized entities. These entities own a treasury of dollars that back each coin so that each coin can be redeemed for a dollar by the holder from the issuer. So yeah, guys, if you have your money in USDT, USDC, and BUSD, just know that your money is backed and there's no need to worry about it because, it's backed by the treasury of dollars, unlike Terra USD, which used the minting burning strategy. So yeah, your money is safe with USDT and USDC. DAI is different in that it is collateralized and backed by a diversified portfolio of crypto assets. Instead of being issued by a centralized entity, a DAO called MakerDAO manages DAI. DAI is collateralized with crypto rather than dollars, but it is, and that is critical over collateralized. So UST is even more different. It's not collateralized at all. It's a stablecoin powered by the Terra protocol. Instead, it's backed by a crypto token called Luna, and we already covered how it works. It's a minting burning process, guys. So yeah. This is pretty clever on the surface. It's simple. It's if the demand for UST is high enough to increase the price to 101, the protocol prints some UST in exchange for getting rid of some Luna. The problem is that it works perfectly until it doesn't, and boy, it did stop working last Monday. And as you can see, guys, here goes the chart. It just shows that Terra, Luna, and USD, they just been going all the way down, you know, down, 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 draining. That's supposed to be $1, not 11 cents. The Luna chart somehow looks worse. As you can see, guys, this is the Luna chart. It just went up, down, and then it just went all the way down this week. Okay, naturally you're thinking that the mechanism broke or something. It didn't break. It worked as designed, and you can see that if you look at the amount of Luna that has been issued, the protocol tried to algorithmically bring UST back to $1 while Luna's price was tanking. And that's, as you can see in this chart, guys, the total supply of Luna went from 725 million tokens to about 7 trillion tokens, and lost 99.9% of its value. Yeah, it's just a sad situation, guys. It's a sad situation for a lot of investors. UST did below $1, and all attempts both by Terra Protocol and by the lending out of LFG couldn't bring UST back to $1. Between UST and Luna, over 40 billion of value was lost. What happened doesn't really matter. What really matters is that when something bad happened, Terra couldn't handle it, and it's under collateralized, and the stablecoin will fail no matter how long it succeeds. So yeah, guys, the system failed, but if we're honest, UST was a wild success up until the moment it wasn't. History should serve as a lesson here. When we will see a successful UST copycat crop up in 2027 or whatever. We are also lucky that UST and Luna aren't big to cause mass hysteria across all the markets. So yeah, guys, we learned a lot from this crash. Just make sure to be careful when investing in certain cryptos, because a lot of these cryptos have different strategies on